Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. And lately we've been having a lot of trust but verify going on, or as we know it in the digital asset realm, don't trust, verify. Trust but verify, of course, a slogan that appears to have been popularized by Ronald Reagan and a variation of a Russian proverb. But over the years, crypto has certainly had many don't trust but verify events going on. And over the past 2 weeks, we've had continued reasons to do so following FTX contagion, Genesis hinting at potential bankruptcy or restructuring. They are a lender, they are an OTC desk. We've got BlockFi filing for Chapter 11 this week, confirming several things, including that they had $355 million on FTX. How or why this amount of coin was on FTX could be related to the potential loan that Alameda, Sam, or FTX gave BlockFi. FTX appears to have had a long history of coaxing assets onto the platform, so that may have been part of the deal for the loan. We don't know yet. I don't believe. That's just my own speculation. And there's been a lot of chatter about Nexo, who sort of survived the Terra Luna debacle, survived 3AC, Alameda, and is also a crypto lender. Appears to be fine. I have no insider knowledge one way or the other, but when I see things like this going on, I certainly get a little nervous and personally don't plan on ever using a service like this. There's a lot of potential for issues, clearly, based on number of counterparties, duration mismatch. Who knows what could go on here, right? But as a user participating in these services, you have to know what you're doing, what they're doing with your money, right? Don't trust but verify. So if they don't tell you how they're getting a yield of 10%, which is what Nexo, I believe, was touting or is touting, that's a problem. But at the very least, they're telling you up front, here's what we're doing, here's how we're getting our yield. So at least they're being transparent about it. I don't know if Nexo's fine or not, but if they were to announce some issues with some transactions, that would not surprise me, right? Because they're a similar crypto lender to Voyager, to BlockFi, sort of entangled in all of this mess where everyone's lending to everyone else. And we're continuing to see exchanges tout their own version of proof of reserves. Here's Kraken from a June 30th audit, looking at various collateral saying, yes, we have 100% or more. And you can also look at your own personal proof of reserve record, inspect the code, make sure that everything is legit on the up and up. This is great. It's a great continued step towards transparency. But what I'd love to see is cold wallets, hot wallets. You know, when Bitfinex was having issues years ago with Tether reserves in 2018, we were able to sleuth out, this is the Tether reserve wallet, this is the Bitfinex wallet. This is what happens when interactions between the two take place, right? And we were able to see all that. We live in a multi-chain world now. We have coins through bridges all over the place, right? It's become increasingly complex, but not unknowable and not impossible to find out. So it's good that they just had a reserve. They've had a reserve previously in December. And, you know, we can go down this list of all these exchanges put together by DeFi Llama, linking wallets. Again, we need live surveillance, really, right? And I'm sure Chainalysis or Elliptic or whoever else is looking at all this stuff on any given day is very much aware. But I think to return and restore comfort to the public in regards to centralized exchanges, we're going to need to continue to see this sort of thing. Coinbase, Kraken down here. Gemini recently put out a trust center, which again is great. But if I'm lying, I have no way to prove otherwise, right? I have no way to say these are what my numbers are. These are what my numbers are based on what I say. I have no reason not to believe Gemini, right? But don't trust, verify. I'm sure their funds are fine, to my knowledge, right? Again, I don't have any insider information here. There are attestations for GUSD. We can look at those. But as far as crypto reserves, fiat reserves, we basically have to take their word for it based on what I can see. I could be wrong, but I don't see any additional information here. They have audits done yearly. that's just not enough. Just not enough. We need continuous active monitoring to catch this stuff. And even when we did have continuous active monitoring in the FTT situation, the centralized parties still have ways of sort of hand waving what's going on if there's enough trust to do so, which appears to be what happened with FTT on September 28th this year. So this is a good first step. And again, we can look at all these other stablecoins. This is just Binance USD's transparency reports. They have one every month, and they go so far as listing the QSIPs of the treasury bills, maturity dates, right? This is what you want to see. This is, according to the TradFi folks, what happens on any given day, just general cash management, vanilla expectations. So more auditing, more transparency is definitely what's needed here. But as many people are already aware, centralized exchanges aren't banks anyway. You should use them and get out, or use them as needed, not necessarily store general funds there unless you have solid understanding of custody. These are the circulating supplies of stablecoins, and maybe they're doing better than expected in a sense because we're not seeing just continuous withdrawals here of USDC or Tether, Binance USD in the blue, DAI in the pink. Some declines week over week, sure. Based on what I could tell today on chain by one of these active monitors, it looked like USDC burnt $500 million of USDC. That hasn't showed up yet here on Glassnode, but there is some contracting going on here, which makes sense in the current environment. If nobody trusts anything anywhere, right? Why are you going to trust a stablecoin, centralized or not? It's understandable. Speaking of trust, again, balances on exchanges, this is Bitcoin, continues to essentially fall off a cliff, which means users are taking coins off exchanges. It does not mean necessarily that they are selling coins. They are physically taking them off exchanges, which is a large signal of fear going on based on what we can measure on centralized exchanges. Here's the full list down here based on what Glassnode measures. But that is a about face completely from 2018 when we saw basically an equal amount of coins get deposited to exchanges during that drawdown period. ETH very much the same. ETH hitting levels not seen since 2018 based on coins sitting on exchanges here. Again, we can look at which exchanges Glassnode is specifically looking at, and ETH can sort of sit and live in DeFi, so it makes more sense for ETH to not necessarily sit on a centralized exchange. But this is a steep decline in ETH sitting on exchanges. On the flip side, we have Bitcoin miners who are under a bit of duress considering their profitability is at multi-year lows. And it looks like they're being forced to sell Bitcoin here at the biggest clip since really pre-2020. The previous jump here was a single miner or a couple miners sort of selling into strength. Here we have miners who are essentially being forced to sell to cover loans, to cover collateral, all sorts of stuff relative to their profitability margins, overhead. Hash rate has started to come down. So we're starting to see mining indicators that suggests extreme pressure for miners. So it wouldn't surprise me to continue to see that until price recovers and or hash rate declines significantly. The other issue over the past week has been the potential for wrapped Bitcoin and wrapped Ethereum to sort of slip below its parity with Bitcoin and Ethereum. Now, wrapped assets are assets that sit on ETH and are versions of the equivalent, but you're able to manipulate them directly on ETH. So ideally, you're giving your Bitcoin or Ethereum to a smart contract or a centralized entity, and they are exchanging it for the wrapped versions that you can then use in DeFi and manipulate as you will. There was some concern that FTX still had the ability to sort of mint wrapped BTC or manipulate wrapped ETH in some way, and it looks like there have been measures taken to prevent that from happening, but that did not assuage all the concerns. As we can see, wrapped Bitcoin here falling slightly. This looks more exaggerated than it is, and Terra Luna started the same way with UST, so it's not exactly yelling fire in a crowded theater. There's clearly something happening here. There's some concern going on, but that has looked like it's recovered. If we zoom way out, though, in general, we're not seeing large spikes down in the parity between wrapped versions of Bitcoin and Bitcoin. Historically, shops like Alameda or FTX have sort of righted the ship and arbed out these lows. Now, I wouldn't consider this a peg. A lot of people call this a peg. It's not to me. There's no general open market operation that's correcting this stuff. It's up to the market. It is the market price. If the market believes something to have a problem, they will sell it down until there's a willing buyer. Wrapped ETH, the same. This was earlier in the year, and a lot of people concerned about wrapped ETH in the near term. But if we zoom in, there's really no major issues that you can identify over a longer time frame. I think everyone's just super hyper focused on issues that are potentially cropping up. And then lastly for ETH, something that came under the radar, I think, with all the news swirling around, the code for withdrawing ETH from a staking contract is being written and tested, and looks like it's ready to go on a version of a testnet right now. It's going to take many, many testnets, just like the general merge did, to get this thing live, but at least the ball's getting rolling on that. And it doesn't look like your Ethereum is going to be locked forever if you're staked on the protocol. Flipping gears to some technicals, just looking at the Tether USD market price again. I would hesitate strongly to call this a peg. It is not a peg. Anyone who's willing is welcome to buy Tether at 996, sell it higher, or send it to Tether, the company, and redeem it for $1. We can see that generally the Tether USD pair holds a slight premium, which makes sense based on fees or demand. And really when we see a deep drop, this was Terra contagion or Terra fears at that time. You know, anytime there's any issues anywhere with anything, Tether sort of gets the brunt of it. And you see that popping up in the Tether market price falling below $1. This time it was probably a combination of FTX, contagion fears, Silvergate, contagion fears, likely unfounded, right? It could be anything. It doesn't really matter. You've got people probably still short on this thing since mid last year, but it looks like it's on its way back to parity, right? Now, would it surprise me if any of these products, if any of these exchanges had issues? No, it wouldn't. But I'm looking at the data, and the data is telling me that we're sort of returning to normalcy, and the contagion fears with wrapped assets or stablecoin market prices are course correcting. To close us out with a few technicals on the Bitcoin chart, I think one of the simplest and strongest things to watch going forward is a combination of the 200-week moving average, the green here, and the 20-week moving average. We've never seen price below the 200-week until recently, and historically when price is below the 20-week, we are bearish. So we're in a uniquely bearish situation based on historical moving averages. So for me, the baseline expectation is bearish continuation until we are back above the 20-week, back above the 200, and we have a bullish 200-week cross. A combination of those things can lead to additional conviction for bullish reversals, but very clearly, as we're seeing now, we are not above any of those things. We have a bearish cross here. There's really no reason, based on technicals, to expect any bullishness until some of these averages zero out, we mean revert, stuff like that. I think it's possible to think as though max pain is in, contagion appears to have spread. You know, we may have 2 or 3 more significant businesses announcing restructuring or bankruptcies, but seeing small exchanges that no one's ever heard of sort of go under, not really that big of a deal in the grand scheme of things, right? Despite it making headlines, because that's what everyone's focused on right now. It's still a problem, but in general, it doesn't affect the protocol. Not your keys, not your coins, as they say. And it is unsurprising at the moment based on current market conditions. We can also look at the daily cloud and the daily 200. Again, we're below both of those. We've been below both of those since late last year. So the bullish litmus test for me, the trend litmus test, is easily the cloud, the daily 200, the weekly 200, the weekly 20. You know, you don't really need much more than that. You don't need fancy lines, Fibonacci extensions to really help understand what's going on here. You know, I don't even need headlines necessarily, because I'll see it on the price chart, right? If I was on a deserted island, I would have been fine paying attention in October to very few technical indicators, right? That's why it's a good idea to know at least a few of these things, even if you don't think they're valid, agree with them, think they're useful, right? They do help. You could say they're lagging, right? That's fine, but in general, they're pretty good with Bitcoin specifically. And if we're going down the decision tree, we can also compare Bitcoin, as many people have done, to other drawdowns, other bear market periods. You can see we're within the duration of previous bear markets, not necessarily in drawdown depth of 80 to 85%-ish, right? We're getting closer. So for me, something like a risk reward on a short is low here, regardless again of what's going on, because historically we don't have much more downside than this. And you can say, well, the Fed's going to be hawkish for the next year, rates keep rising, right? I understand, I get it. That's a valid argument. And like I previously said, nothing here looks bullish, so it's completely fine. From a technical perspective, the hold is short, but from a historical drawdown perspective, I think we're getting closer, certainly, to an attempted bottom process. You know, just like in 2015, this could take another 140 days to figure out. So we got plenty of time. You know, as a longer term investor, I think seeing situations like this are much more advantageous because there's no FOMO. You're not finding about this stuff at all-time highs, trying to figure out what it is. You have time to educate yourself on the differences between the protocols, the exchanges, the players in the game, all that sort of stuff, while having plenty of time and zero pressure to feel obligated to start making significant investments quickly. And if we look at the daily on Bitcoin and ETH, we measure this out. Again, the expectation is bearish continuation. We can use technicals to give us zones where we think price will eventually reach. For Bitcoin, that's between 12 and 15. And for ETH, theoretically, it's a 50% drawdown from here, which sounds extremely significant and is, but all we're doing is just measuring the sort of previous consolidation range and pointing that downward. So I certainly think this target is less of a conviction than this Bitcoin target, at least at the moment. And on the flip side, in the near term, on the 4-hour for Bitcoin and Ethereum, we've got the potential for an inverted head and shoulders. We've got declining volume profiles. We're moving into the cloud. Ideally, you want to see price above the cloud again. This is sort of a low conviction setup overall based on all the higher time frame bearish metrics I've just highlighted. But at least in the near term, this remains possible for some bullish relief, purely based on technicals. That's all I have for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.